And now I'd like to introduce Bob Thomas with the Michigan Chamber of Commerce.
Thanks, Tammy. This is Bob Thomas, Chief Operating Officer for the Michigan Chamber of Commerce, and today we're pleased to present adding our valuable benefits for Chamber staff. This is part of a series with Tristar Trust and Newport Retirement Services on the Michigan Chamber's multiple employer 401k plan. As our chambers are getting back up to speed with employee benefits and finding ways to continue to add value to retain and recruit our employees, we're pleased to offer an easy administrative option that hopefully saves chambers time and money in offering a 401k benefit to their employees. Today's webinar is being archived and will be available shortly on demand on our webinar dashboard. And if you need assistance at any time or have questions for the speakers, please type it in the chat box on the lower left side of your screen. We'll respond as quickly as possible to get your answers or questions answered. Some questions may need to be answered on an individual basis, and we'll be happy to follow up with you after the presentation. Right now, it's my pleasure to introduce our guests, Jane Hagan, Senior Vice President, Director of Retirement Plans for Tristar Trust Bank, based in Midland, Michigan, and Dale Essenmacher, Regional Vice President for the Newport Group. Jane and Dale.
Thanks, Bob. This is Jane Hagan, as Bob said, from Tristar Trust Bank, and I'm doing our presentation today with Dale Essenbacher from the Newport Group. So we're so glad that you joined us. And just so you know, if you type questions in the chat box, no one else knows where those questions are coming from. So please ask questions as we go along. And as Bob said, some of them we'll have to get back with you on, but we hope you enjoy our presentation today. So to tell you a little bit about our agenda, we're going to first talk about some major changes that came out of Washington, D.C. in 2019 and in 2020. We'll talk about what the MAP is, what it stands for, and how it can benefit you. We're going to talk a little bit about the future retirement outlook, your responsibilities if you would join the MAP program, how we can help you with those fiduciary services from investments to administration, and at the end, we'll offer you a cost comparison of your existing plan to show you know exactly where you are today and where you would be with the MAP. So with that, I'm going to turn it over to Dale, and he's going to start it off with the changes from Washington.
Thanks, Jane. I appreciate that. So this is Dale Essenmacher from Newport Retirement Services. I'm Regional Vice President at Newport, located here in South Lyon, Michigan. So what we've seen over the last 18 months, and it even started about 3 years ago, but really the last 18 months has seen some major changes as it pertains to the regulatory environment for retirement plans, specifically 401k plans. This all started back in September of 2018 when President Trump issued an executive order really diving into the retirement plan industry and trying to push off the retirement crisis from the governmental sector, state and federal governments, to the private sector. People like myself, like Jane, that work on retirement plans every day. What he was basically saying is, how do we get small businesses or give them the ability to either start a retirement plan or move the retirement plan to a more cost-effective way? Understanding that there's many Americans that do not have access to retirement plans within the workplace. We're going to talk about that in a minute. So how do we fix this problem? And what President Trump did in that executive order was really push the problem towards the private sector and let the businesses that are truly professionals in this industry figure it out. So the Department of Labor back in July of 2019 used his executive order and kind of expanded that. And what they really did, the Department of Labor in July of last year, is they came out and said, let's expand the ability for small businesses to join a larger plan called multiple employer plan. So multiple employer plan has been around for about 20 or 30 years. It's been around for quite a while, but really have not been that popular. The reason why is they've been pretty much before last year strictly for PEOs or professional organizations that had memberships. What they did in 2019, mid-2019, is they came out and expanded or loosened, I should say, the restrictions on the commonality rule and allow for other associations to sponsor a multiple employer plan. They specifically, in that guidance in 2019, said that the chambers around the country can sponsor a multiple employer plan. So obviously this opened up great opportunity, and the Michigan Chamber of Commerce called me probably 3 days after July 3rd, and we decided with Tristar Trust, to pursue this type of retirement plan for its chamber members. So in September, actually October 1st, was the first day that a Chamber of Commerce could sponsor a multiple employer plan. So over that last 3 months, between July and October 1st, we were working with the Chamber and with Jane at Tristar Trust to formally implement this multiple employer plan. So we're ready to go, which we were near the end of 2019. And then along came something that was probably the most robust legislation that ever happened in our industry, was the Secure Act in late 2019, December 20th to be exact. So what happened in December 20th is Congress passed a law that even made it easier and more sense for small companies to roll up into larger multiple employer type plans or group plans. So not only was the DOL giving the loosening the restrictions and giving small businesses and to join chamber type plans, it was basically opening up for more entities to sponsor these plans. So with that legislation, we roared into 2020. Of course, the coronavirus hit. Then the CARES Act came out in early 2020. So there's been a lot of legislation over the last 18 months. But really the one that we want to focus on and the one that is the most important and pertinent to this call is the actual ability to form a multiple employer plan that the Michigan Chamber of Commerce was able to do. So again, going back to my initial points, why is this even something that's important, right? So the government over the last 3, 4, 5 years has recognized that we have a major problem in our country, in that 57 million Americans that do not work for a government do not have access to a retirement plan in the workplace. That's significant. That's about a third of the people that work in our country don't have access to a retirement plan. The majority of them are small businesses, right? It's not cost effective. There's a lot of liability. There's a lot of fiduciary responsibility. There's a lot of rules and regulations to know as a small business owner. So there's a lot of small business owners that just don't care to either go down that road or it becomes too costly to go down that road. So again, with the executive order starting this whole process all the way through the Secure Act in late 2019, there's been tools put in place and rules changed to allow for these small businesses to join a cost-effective plan, which is a multiple employer plan. So when this did come down, there was a lot of people that had a lot of comments on how effective is this going to be, right? Where is this going to go? And at the end of the day, pretty much every expert across the entire industry in our world, the retirement plan industry, has said that you're going to see a significant increase in new plans and small businesses join these multiple employer plans. There was a lot of surveys that were done. You can see some of the results of that survey, but at the end of the day, pretty much this is the biggest market disruptor when it comes to retirement plans in the history of retirement plans. So again, what the Michigan Chamber did back in July is they partnered with Newport Group and Tristar Trust to form the MIMEP, which is a multiple employer plan available to members of the Michigan Chamber of Commerce. And then Newport Group and Tristar Trust are the engine or what makes this MEP work. The MEP, and I'm going to turn over to Jane in a second to talk a little bit more about this, but just to kind of cover it and preview what Jane's going to say, the MEP, for your purposes as a small business owner or a chamber, a small chamber, everything is covered within this multiple employer plan. The fiduciary services, record keeping and administration, trust and custody services, and then the investment advisory services, including participant education and support by Tristar Trust. So this is an all-encompassing, fully bundled retirement plan solution that allows you at a cost-effective way to offer retirement plans to you and your employees. At this point, I'm going to turn it over to Jane to talk a little bit about the MEP and some of the intricacies of what the multiple employer plan entails. Jane?
Thanks, Dale. So, I want to back up for a second. On the MEPs and the PEPs, why is this such a big focus? If we really look at companies across the United States, small companies, large companies, 45% of companies with 1 to 49 employees offer a plan. Well, that tells us 55% of the companies out there don't have a plan. That's huge. And then if you look at companies with 50 to 99 employees, 25% of those companies don't have a plan. And we also know from all the surveys out there, if employees make anywhere from $30,000 to $50,000, they're 16 times more likely to save within a retirement plan if they have access to one through their employer, because it's very easy, it's convenient for them to do it, it's automatic, they don't have to think about it. What they get in their paycheck is what they have to spend. And so that's why there's such a big focus on the MEPs and the PEPs out there today. In the MEP, again, it's an acronym we use in the retirement industry, but it's a multiple employer plan. A PEP is just a pooled employer plan, same concept. So that's why it's so important that we get the rest of the U.S. covered with some type of program. And, on this slide that you're looking at, why a MEP? Well, this is where, really a lot of small to mid-sized companies, I would say anywhere from probably 7 employees to 150 employees, come together, pool their retirement plans together because it provides them with additional benefits, just like some of the Fortune 500 companies have in the U.S. today. It's a lot more cost-effective for companies if you pool together because you have a larger participant count, a larger asset base, which, more numbers means a little bit less cost. And at the end of the day, a lot of small companies do not have an HR professional on staff to run a 401k on a daily basis, so they're looking for partners that will help them outsource some of the fiduciary risk, investment risk, and so forth. And that's where Tristar and Newport come in together. Tristar is your 338 investment fiduciary. 338, again, remember, is just the code in the IRS. And Newport acts as your administrator. So it really limits your fiduciary liability, which this is what every small company is looking to find. And the work on your behalf is very minimal. It is, first we'll start out with some plan design and things, but at the end of the day, after things are up and running, you're going to need to submit payroll deductions and submit your company contribution. And then at the end of the year, you'll have a little bit of work by us asking for some census information and ownership of the company and see if anything has changed, but very, very minimal. You can leave the rest to Tristar and Newport, which really in turn lets you focus on your business. We want you to grow your revenues and your profits in your business because if you're a successful company, it will in turn help your employees obtain a little bit more money in their retirement plan and have a successful retirement themselves. I mean, everybody's looking towards those golden years someday, and if we can do all these things in the right order, they will have that. And you'll feel good because they'll leave your company someday with a nice nest egg to start their next adventure in life. So on this next slide, your responsibilities within the MEP. So if you may have a plan, you may not have a plan. If it is a startup plan, just remember there's a lot of tax advantages, tax credits that the IRS, that was part of that Secure Act at the end of 2019, they put into place. It's up to $5,000 for up to 3 years. So talk to your CPA. See what cost you're able to take advantage of if you're just starting a plan. And again, it's minimal cost to get started, minimal liabilities, and really it's a lot less hassle than having your own individual plan. Now, if you have an existing plan, there's many, many reasons why you should join it. It's, again, cutting back on your expenses, your fiduciary liabilities, your time that your HR staff handles, and the duties that are involved. Let your HR staff work on other things. So if you have an existing plan, that works also. We've actually been converting existing plans and new startup plans into the MEP. And, just to tell you how employees are really looking for something to save, a vehicle to use that's easy for them, and payroll deductions the easiest way to go, is we've put a few startup plans into the MEP in the last couple months, and we've had over 90% participation. That really just tells you they're looking for something in a vehicle that's convenient for them. And, I think at the end of the day, they're looking for somebody to, know that we care and we want them to get to retirement. In turn, it just really sets a good tone for them working for your company because then they know you care about them also in saving for retirement. So it's a win-win all the way around. So when you get started with us, We're going to have some initial paperwork to get signed on, but then we're going to go through a plan design call and determine what's the best plan design for your company. Do you want to offer loans? Do you want to offer hardships? What's the eligibility requirements? Do you want them to go in immediately? Do you want them to wait a year? There's a lot of different options. Your plan does not need to look like the neighbor's plan. So that's the good news. And then we'll be doing some employee communication meetings and walking through the staff, what the 401k is all about, how they sign up. We'll help them with the investment elections and so forth. Then payroll deductions will start. So we'll be off and running. Ongoing work, again, as I said earlier, about submitting the payroll deductions and the company contributions as often as you get paid. So if it's weekly, it needs to go in weekly. If it's biweekly, it goes in biweekly. And then, you're going to review reports to monitor how the program is being managed. And so keep in mind that Michigan Chamber of Commerce is the lead employer. Every employer that comes underneath that is called an adopting employer. So you're going to adopt the Michigan Chamber of Commerce multiple employer plan. So we will be supplying all the information to the Michigan Chamber program, and they will be doing the due diligence on us and Newport Group. Once a year, you're going to be submitting information for compliance reporting for the testing of your plan. For those of you that have existing plans, you totally understand this, and this is where we just need to know the ownerships of the companies and making sure that, all tests passed and so forth. So it's very, very little work on your behalf in the long run. The biggest thing is really submitting payroll deductions and doing that on time, because that's the most important for your staff. And then doing compliance work once a year. So with that, switch it to the next slide. And so on the fiduciary services, when you're outsourcing these, on the right side of that screen, you will see 316 and 338. Don't worry about those numbers. Those are just sections of the ERISA code where what explains what an administrative fiduciary is and an investment fiduciary. But in simplistic terms, your 316 administrative fiduciary is Newport Group. They're the record keeper. They're the one responsible for doing all the accounting behind the scenes, producing the statements, doing the testing of the plan on an annual basis. They're also going to furnish the disclosures that are required to all plan participants and beneficiaries on an annual basis. And those are things, too, that a lot of HR managers say, I don't have time for this. Well, this is something that Newport will handle for you. And they also take care of the plan document and any amendments that need to be done. We will work in conjunction with them on that. They approve all plan distributions. So if somebody wants to take out a loan, somebody retires, somebody quits, somebody passes away and it's got to be paid to the beneficiary. What if somebody's going through a divorce and they have a quadro that needs to be approved? Those are all things that Newport will handle. And it really takes you out of being the middleman, which is important, because if somebody's going through a divorce and it's messy, you really don't want to get involved, nor do you really want to hear all the stories behind it. Another thing that our plan sponsors really enjoyed this spring is when the COVID hit and the CARES Act was passed, where employees could take money out of plans if they have a COVID-related distribution reason. It really took the plan sponsor out of saying, was it COVID or was it not? So those are really good things that you don't look as the employer as the bad guy and say, no, let Newport do that. And also keep in mind if as Newport's approving all these, if something ever goes wrong, because, errors do happen, we're only human, but if something does go wrong, Newport's the one that will stand behind it because they are the administrative fiduciary. Now, Tristar is going to be the investment fiduciary. We will take care of the investments. So we have the discretion over the investments of the plan, and every plan within the MEP will have the same investment offerings. We will continuously select those, monitor those, manage those, and we do that on a quarterly basis. And we have various systems that we monitor the investments against. So it's just not one system. We use various resources to select and monitor. We will be giving those reports on a quarterly basis and doing a report card back to the Michigan Chamber. So they review the investments also. We have an investment committee at the Michigan Chamber level that reviews our work. But again, we're signing on as the 338. We'll also be responsible for choosing the plan's QDIA. What is a QDIA? Another acronym in our world. But a QDIA is a qualified default investment alternative. All that really means is that when a participant doesn't select their investments, they get enrolled, but they never go online and select their investments, we will put them in the qualified default investment alternative. So it's just that we're selecting that. And really, it's a target date fund according to their age and when they'll retire. So again, you have two fiduciaries working for you, the administrative side, the investment side. Newport also acts as the directed trustee of the plan, which is very important for all of you to know. At the end of the day, this avoids conflict of interest, gives you overall increased service level. So it's just a win-win for everybody, for you and the participants. So I can't say enough about it. So with that, I'm going to turn it over to Dale, and he is going to chat a little bit more about the 316 services from Newport.
Great. Thanks, Jane. I appreciate that. One thing that Jane said that I want to go back and emphasize even more and cannot be understated is the reason this plan exists, right, or what the feel of this plan is going to be for any small employers. You're getting a plan that is very similar to what a Fortune 500 company would get. The services that we're describing, the 316, the 338, typically we don't see these in your standalone plan for businesses with less than 100 employees. Typically this is where you get, a 2,000 or 3,000 employee type company are offered these services. So by joining this multiple employer plan as a small company or a small business owner or even an individual chamber, you're going to get a lot of the services that other large entities are afforded in the retirement plan space. So Jane accurately depicted that earlier. I wanted to make sure I emphasize that because it's very important to recognize what you're going to get by joining the Michigan Chamber's multiple employer plan. So in more detail, right, the 316 services that Jane had alluded to a little bit earlier, Newport does act as the 316 administrative fiduciary. For those that have a plan, this is going to ring very loud in your ears because you're doing all this work now that we're taking off your plate. For those that don't have a plan, this might be one of the reasons why you didn't start a plan, is not understanding all the rules and laws and regulations that come with ERISA-sponsored plans. So as a 316, Newport is going to do really three basic functions. Obviously, the maintaining the data. This will not only include just keeping track of the data, but also tracking eligibility, tracking beneficiary forms, right? This is becoming a very key topic, obviously, with what's tragically happened in our state over the last year. Making sure that those are up to date, right? Tracking down employees if we don't have a beneficiary form. But just again, keeping track of all the data, making sure if the plan ever gets audited, a DOL walks in, we have 100% all the details behind all the contributions, any distributions, anything that happens in the plan. We have all that data and the auditor would go directly to us. Distribution processing, this is something Jane talked a little bit about earlier and becomes a very big sticky point with a lot of HR departments. Today, in a standalone plan or a plan that doesn't have 316 services, the HR department typically would approve any type of distribution requests, whether it's loans, quadros, hardships, again, going back to the CARES Act, those COVID-related distributions. There was a lot of questions that our clients came to us. I mean, we have 20,000 clients on our record-keeping system. We had calls left and right during the CARES Act and said, what do I do? How do I know this is a COVID-related distribution? Do I have to get medical bills? Do I have to get something signed off on a doctor? There's HIPAA laws involved. How do I interpret this? Well, if you had our 316 services during that time, we would interpret it for you. We would take care of everything for you and take you off the hook trying to understand and even answer those uncomfortable questions with individual participants. And then finally, with every plan, for those that have it, you know this, and those that don't, this is a requirement that you have to do a number of distributions and notices to participants as well as to you, the plan sponsor, in this case, the adopting employer. We handle all of those notices, okay? So part of the 316 is us making those notices available either via distribution, posting to the web, via email. A lot of rules changing around notices coming up in 2021 as well. But at the end of the day, rest assured that we have the ball when it comes to all the notices and making sure that you're going to be in compliance with ERISA law as it currently stands when it comes to notices. Next, and again, this is with our 316 services, but also just as a normal course of business, Newport will act as the record keeper and the administrator for the plan. So again, this is, if you do have a plan today, this is when you log on to a website, right? It would be logging onto the Newport website. We're going to keep track of all the participant account information, give you the ability to make changes into your investments if you want to make changes. There's a lot of financial tools on that website and resources for you to access. So all the record keeping systems we're going to do, send out statements on a quarterly basis, make them available electronically, or if they choose to opt out into a paper statement, they can do that. That's where they could request any changes or changes to their enrollment or contribution rates. They can do that all online as well. And then, of course, the administrative services. Jane alluded to this a little bit earlier, but each individual adopting employer still is required to go through testing at the end of the year. So there's eligibility testing, there's high discrimination testing. If it's a top-heavy plan, there's ADP, ACP testing, 415 limits. There's all types of tests that needs to be done. Each individual adopting employer, because you still have the ability to have your own individual plan provisions, even if you join the MEP, has to be tested separately. And then it rolls up into 15500. And that's an important point to note. You will no longer, if you currently have a plan, you will no longer be required on an annual basis to file a 5500 form. That will be filed by Michigan Chamber of Commerce as the lead employer for this plan. So it's a fully bundled solution, all-encompassing, one-stop shop. You have Tristar Trust as the one-stop for the advisory services, investments, participant education, participant communication, and you have Newport, sort of the engine behind it or underneath the hood, doing all the record-keeping administration and the 316 fiduciary services. Jane, I'm going to turn it back over to you.
Thanks, Dale. Yeah, I can't reiterate what Dale said enough. I mean, you have a turnkey product here with everything being taken care of for you and all the fiduciary, advantages to it between the investment side and the administrative side. There's, in my eyes, there's no reason any company any longer should not have some type of retirement program with the MEP services out there. On this last slide here, we just really bring it all together. You know, how it starts out with is when you decide that you want to become part of the MEP program, we have an onboarding team. We gather some information from you, demographics and things like that, and then we work with that team to do plan design, get you all set up and running, and then it shows you where we're going to show you how to do payroll deductions, we'll do your communications, we'll get everybody enrolled. Our team at Tristar will meet with your staff, we'll meet with them individually to make sure that they select their investments appropriately. We'll take that information back, we'll upload it to our system so they don't even have to do that. The service team, we'll get you involved in the employer website, and that's where you'll have access to on-demand reports. That's where you'll see the contributions going in. You'll have access to the participant level data. And the compliance team is where we'll be meeting with them and doing plan design. So again, as I said earlier, your plan may have loans, it may not. Your eligibility will be different from your neighbor's plan. So all those things we'll go through with a compliance team. They'll draft the document, you'll DocuSign the document, and that will be your plan document within the MEP. And at the end of the day, when we get all done, up and running, we get that first payroll deduction in the system, you'll be transferred over to your service team going onward with Newport. So you'll have a service manager there that you can call at any time for day-to-day questions or day-to-day interactions. And then you'll also have your service team at Tristar for your participants and yourself to chat about the investment side and communications. So you got a really, really nice team of experts working for you. And again, you know, I always say go to the experts in the field. If you want to, you know, have a heart operation, don't go to a kidney doctor. You want to go to a heart doctor. And that's why, you know, both Newport and Tristar have been doing this for many, many years. And so you have the expertise of both teams working with you on a daily basis. Now, on this next slide, if you don't have a plan, we can show you what it would cost you if you have an existing plan and you want to have a free cost analysis, and we'd love to do this for you. We've been doing many of them. These are the things that we would need. And we can help you locate these on your existing plan sponsor website if you don't know where these are at. But they're basically the participant and the plan sponsor fee disclosure, what your current fund lineup looks like, and any other fees that you may have from maybe a TPA, third-party processor, and so forth. But we'd love to do that cost analysis. It's a great due diligence report for you, so you know exactly where you're at. Remember, we do this every day. We can find all those costs. We'll show you full fee disclosure on both sides, where you're at today and where you would be with the Michigan Chamber of Commerce map. So on this next slide really gives our information, myself and Dale, and our phone numbers. So please reach out to us. We'd love to chat with each and every one of you and see if there's an opportunity that you could become part of the MEP. If you need a cost disclosure, we'd love to do that. So please reach out to us. We appreciate your time, and if anything, please stay safe and healthy and enjoy the holidays with your family. And I'm going to turn it back over to Tammy to wrap up the webinar.
Thank you, Jane and Dale, for your time, and thank you to the audience. The recording of this webinar will be available shortly. Have a wonderful day. You may now disconnect.